Okay, hi there, traders. Hope you're doing well. Just give us a hello if I'm coming through loud and clear. I've got my coffee, I'm ready to go. So, all right, who's on today? Okay. Hi guys. Hey John. Hey Magda. Magda. Let me get that right. All right, let's get stuck in it then. Welcome, guys. It's Monday the 17th of September, so hope you all had a good weekend. Nice and relaxing. Enjoyed yourself. Um, I know I did actually. We relaxed. Went out Saturday night with the kids. Had some friends. Just kick back and relax. So that was good just to unwind. Considering the last few weeks in the market have been a bit all over the place, but it seems to be that we bounced back a bit on Friday. We're actually bouncing around today, which is not too bad. We actually traded night and bouncing back as we speak, I think. So it's not a bad sign. Um, we'll go through the usual. Anyone that's new, feel free to join us on Twitter. You'll see in the top left-hand corner. Top right, you'll find us on Facebook. And the bottom right-hand corner, you'll see our YouTube link. Just subscribe there. Um, That's probably better. Sorry, John. I actually had my speakerphone up near my head. It was a bit strange. Yeah, like I said, anyone that's new, just you can see our links there. The top left is Twitter, top right Facebook, and the bottom right is YouTube. Um, Sorry about my voice too. I've got a bit of a cold. Caught it from the kids. Throat too is a bit playing up a bit, so I might get a bit croaky, a bit husky. But still, I've heard it sounds a bit cool, so I might sound like more of a man now. Um, let's get into it. So Friday night, it was pretty much a flat night. Excuse me, flat night in the US. Not much happened. I think Dow was only up a few points. The S&P was up, up to pretty much break even. Not even a point on the big S&P, and I think the Nasdaq was down ever so slightly as well. So not not much was playing out on Friday night. Not too many people. I think there's still a bit of concerns around. Obviously, a bit of a pickup with the China-US issue. I guess your trade war issues. They're still, China have accepted that they're going to have to go to negotiations. I think um, Japan. What am I talking about? The US have asked them nicely to come into negotiations. So that's buoyed the market a bit, giving people a bit of confidence saying, okay, they're actually taking the next step. But then I think it was all going along nicely on Friday night, and I think Trump might have come out and said, oh, well, we're ready to go with the tariffs. So he's still, every time it's talk they're going to go into negotiations, he'll come out and say that. I guess it's just tactics, who knows? But it keeps a lid on the overall market. I think we had some good numbers out in the US, so quite strong, still positive towards the economic growth over there. Um, the Turkey situation and emerging markets. Let me just see if that's going through. So I'm just seeing it buffering on my YouTube site. If everyone's having problems, if anyone's having problems, just let me know. It seems to be coming through okay. And just don't forget, if it's a bit blurry on your screen, you can go to the spinning wheel, the bottom right corner. That's the settings wheel, and just click on quality, and you can go to 720, I think. Just means it's a bit clearer coming through. Gino, how are you, mate? Where was I? So emerging markets, that's another headwind that everyone's sort of concerned about. Now, I think Turkey came out and they've raised interest rates by 6.5%. Talk about it. That's a big. I mean, they needed to. I think the president was just adverse to raising rates for whatever reason. Um, it didn't like it, and they finally come out. They've had to do that because inflation was getting out of hand. The lira was getting hammered, and they were talking about or concerned about contagion through other emerging markets, which their other emerging market currencies have copped it a bit as well. The lira seemed to have stabilised a bit, and I think they're going to crimp spending over there as well. The president's come out and said, "Okay, we're not going to." So I think, from what I've read, they're notorious on just spending up big on um, infrastructure and bridges, all these sorts of things. He said he's going to continue on the ones that are going, but there's nothing in the pipeline. They're going to hold back on it. So basically, cut right back on spending, which I think is going to support, or it's going to might find some support into the lira. Um, that's Turkey's currency. Buoyed a bit. I think the volatility's come right out of that market, so it got absolutely crucified. And then the volatility coming out is not a bad sign either. It means that potentially you got the shorts that are thinking twice about holding, maybe booking some profits, starting to edge back in, or sorry, edge back into buys, or edge out of their shorts, or you might get some bargain hunters starting to come in potentially and just taking a long position. So either way, it's starting to ease up a bit over there. So hopefully that contagion effect throughout the emerging markets is not going to play out that way. So we'll see how that goes. So either way, there was a few things that were playing out on Friday night. Our markets, let me just transition there. So the SPY is what we always follow in the morning. You always just check out where the SPY went from 4 o'clock close. Well, yeah, 4 o'clock close until, well, the close of the next session. The close of the morning session is around 7:30, I think, at this stage. 7:30. So basically, just checking out where that closed. It was up 10 points from 4 o'clock, which means you roughly, that's where you sort of expect the ASX to bounce a bit on the open, which is about 10 points or so, I think it was. But instead, we've actually, just go and check it out. I think we opened down intraday. There you go. So we've actually, you can see that's the open there. We've actually opened slightly down, pushed all the way down to about 61, below 61.45 to 61.40. That was down around 30 points, and then we've pretty much bounced from there. We're actually bouncing as we speak. So not a bad sign. You can see that was pretty much a high and low on the 30-minute charts. You can see on the daily, it's holding a high level from where it's, well, a couple of days ago, which was Thursday. The lows around 61.26. We've had lows of 61.42.3 today. So that's looking more positive for me, a bit more bullish for at least a retracement, whether we're going to pop up to 62.50. Let's just thicken that up. 62.25, 62.50, 62.75. We're going to pop up here, maybe retest the 6,300 and roll over. Or ideally, I don't want to see it just go straight up from here. I would like to see it pop up, build, pull back to build a high low. Probably just put in another few, drag in a few short sellers, squeeze them back out on the way up. But I think that's a bit better price action, which you'd like to see, and then start to build. You want to see the better base built from here, as opposed to just from here going straight up. If it goes straight up, I'd be more inclined to think it's going to be, from a weekly, potentially lower high, and then you're going to get something like this. You get this sudden thrust lower, pop back over a couple of weeks, then start to roll over and take out these lows at 61, deeper correction, and that's where we'd probably be looking down towards 6,000. Either way, what we're seeing, I was just flicking through a few charts this morning, as you do, and having a quick look at some setups or where the charts are, and there's a few that are going okay. They have been trending for quite a while, so they're the ones that are trending up nicely are well-established trends, and I find those a bit harder to get onto because it might sound a bit stupid, but a well-established trend, sometimes I tend to look at them how much for everything's got to finish everything. Um, they're always going to get overbought. So you just really, when it's well established for me, when it's on a weekly chart and the dailies, ticking up all right as well. Yeah, you can jump on there and you can pull out some profit, but you tend to, what's going through my head is I'm always looking to see that I'm not going to get in towards the end of a trend. I don't want to feel like I'm getting in towards the end of the trend. And I'm going to be the sucker that buys in a little bit of gain and turns around and gets stopped out, or buying on the highs. I'm never into that sort of stuff. So I'm always looking for something that's probably macro corrected a bit and you're looking for the next leg up. I want to take advantage of a leg up rather than get on potentially towards the end of a leg up. In saying that, I have seen a few that have been setting up okay. Some that are starting to tick off. Some that look like they're really in the zone. Now, what was the one we just looked at? I think it's, look at this one, for instance. This is the weekly chart. This is Cooper Energy. We just sent it out as an alert. That's your weekly there. You can see it's had a good little pullback. And if you look at just the weekly stochastics, it's come off the highs quite well from overbought. It's come sort of approaching that 50% mark. I'm not saying it's going to turn here just because, this thing could go to oversold. It doesn't really matter. But you flick down to the daily, and the daily's in a prime little position too. It's potentially gone from overbought to oversold. It seems to be matching off with a continuation area or continuation zone. And by saying that, you were looking at this, pop up, pull back, continuation zone, pop up, pull back, continuation zone, pop up, pull back. So that's potentially a continuation zone we're looking for. And so it's really just looking for the daily to see if we can pop up, pull back, build a higher low. And then I think I'll be quite bullish on that one to see if we can push up through 50. Looking for levels, where to? Look, it's just got through these. You can see right back on the left-hand side of the chart, or so the far left side of the chart. You see the previous highs were somewhere around 48, 50, so just below 50. It just recently washed out 50, and that's where it's pulled back from. But a longer term view, you might see that could just be the start of it. We've had a sort of big move up here. This is years ago. GFC pushed it all the way back down to below 20. Spent a lot of time trying to go, just couldn't go, and it's come around and washed out those lows, sort of back to reset itself below 15, just above 10. And we've been lifting since 2016, so there's no reason to believe this is a well-established trend. It could be going well, but you're at least coming off a bit of a macro correction on the weekly charts, and you're looking to the daily to look for that entry signal, which means you just got more oomph in the trade up. And even if you're potentially on the end of the weekly trend, it doesn't matter too much because you've got that daily one that you're entering from, and your risk is based on the daily charts. So that was just one example of seeing pop up. I've got another one I'll just show you. Bid energy. This was one that someone else a friend of mine gave me a bit of a heads up, just talking about this. Looked it up. I think I put it in our forum a while ago, saying it's looking okay. I can't exactly remember what they do. It's some sort of, I'm trying to explain it, not a PayPal, but more of an energy system where you get. Oh, let me just read it. I'll show you the profile. Bid Energy, it's called Bid Energy Limited. But it sounded like the idea sounded great. That's why it sort of got me looking at it and where the price was. And apparently, there's potentially some good news coming out. They were gaining new contracts. So Bid Energy Limited is an Australian-based technology company centered around innovation, energy optimization. So that sounds good. With operations in Australia and New Zealand. So Bid Energy's cloud-based platform simplifies a complex energy spend management by a management process by using robotic process automation, enabling organizations to have complete control over their energy. So I think it just it's basically a best price searcher or something like that. Searches for best prices. So either way, I think good little idea. The price structure, you can see it had a good little run up to 16, and then we had that original pullback. It's come straight back down to the MAs. And then it started lifting again. Then you got this price action still, again, it's holding higher lows. So you got a low here. That's your first sort of higher low. It hasn't confirmed. It's only just recently confirmed this high low. But you got inside levels as well. They're starting to lift up, and it started to see bid. You can see the price being bid. Bid meaning that if it's going down, if someone was hitting the offer, it was just getting bought up slightly, as opposed to the bid being reduced, if that makes sense. So someone jumps in on the bid. When they're jumping in on the bid where all the buyers are, that's not as positive as someone hitting the offer because someone is ready to pay up. At this instance, you'd be hitting the offer at 16.5. So if you're bullish, you might think, oh, it's a bit stretched, but someone's outlook might be 50 cents, for example. They go, I'm not going to muck around with half a cent here or there, trying to finicky around with the entry and wait for it to get to 14.5. I could be left on the sidelines. And they may have been trying to do that around 13 and just missed it. So they're giving up a few cents, just go, look, I just want to be in. So that's what I mean by hitting the offer or going bid. So it's looking quite positive, but that's the one it's starting to set up. There could be, if you go to the weekly, I mean, weekly's not saying much until you really drill down and just get rid of this. But you can see it's only just starting to lift. So it's, although it could be looking a bit stretched in the daily, it's had a good little run up and it started to hold that higher low, and it could just be starting to run again. So we'll see how that one goes. That's another one that's just popped up on the radar that's going well. And there's two that someone wanted to talk about. So I think it's CPV. That was you, Magyar, I think. So that is that there. Now can you see this is a cracker. I'm actually kicking myself. I think I was looking at it. I can't remember what I was looking at. It might have been somewhere in here. And I thought I sent out an alert on it, to be honest, but I missed that. And that's, that price action, we just draw it up. Is pretty much, this is one you could probably file away. Go draw it up, take a snapshot, and file it away. So I think this is one you want to refer to quite a bit. Oh, here we go. There we are. So we've had this little, pop up here, and you can see with that run up here with the volume, picked up here, sort of on that each leg up's picked up a bit here, but then we started selling off. That was a negative day when the volume picked up here. You've got to be okay, a bit concerned there. Not too bad until you get through that level. It was around 30 cents. It popped down. You basically got your lower high, and then we started edging down. So this leg down was pretty much the macro correction. We'll just draw it up in a different color. So this is what you're looking for. That's your one leg up, and that you can split that down. So that's your weekly leg up. You can break that up into your daily moves of higher highs, higher lows. Then you've had your weekly pullback. So that's just a correction on the weekly, but that's more of a macro correction like we talk about on the daily. But then this is where you want to see, you can see this green candle here, a good little pop up in volume, and it's taken out the last, 3 sessions highs, thereabouts. So that was, taken up to about there. So you can see that's a bit of a heads up. Then you pull back. So over a period of about 4 days, we build a higher low. Then we start to edge up again, have another little pullback, and that's a higher level. So you're getting these higher levels starting to build and starting to, and you can see buyers starting to edge in here, but they're not too confident because you're still constrained by the previous high around 45, 46, 47, say. But it was about here if you were looking at it about here, when we got this candle, these couple of candles in conjunction really starting to kick off a bit to the upside. And that this candle in particular, it opened, it tested probably half a tick lower or a tick lower, and then boom, finished on its highs. That was a positive, and then you would have had your nice little entry. It was pretty much, I know you might be giving up a bit, but if you're just edging into one position, that's an ideal setup. You can see the high lows building. Anyone that's probably was looking at it here, missed it here and here, is ready to get involved about here. You got your breakout, you know exactly where your risk is, and pretty much it never looked back. So if you entered around 45, for example, you got that pop up, pull back to 50, and then you got straight up to 75, where it is now, 75 and a half. So an actually cracker. Now this is, you can see these last couple of daily candles have really accelerated higher. So if you are long, you'd obviously be assessing this thinking, oh, okay, again, you still need to think this is going to go on forever and just sit and hold it, because this thing could easily turn around and reverse straight back to where it started and stay there for the next year. You don't know what's going to happen. So you're always got to be on the lookout for at least taking a partial. Um, sometimes you can take it too quick in hindsight, but I think if as a strategy or as a method of trading, yeah, I think it's good to take some risk off the table when the markets really start to accelerate. Now, the hardest part is when and where and how. How do you do it? And that's something everyone's got to work out, I guess. How they go about taking partials. Where do they go about? They're happy when the stochastics are oversold. If the stochastic starts easing off and you get a bit of a correction, and then you go back up towards the highs again and you don't quite get there, then take some off maybe. Or do you just take it off at a round number at 80? If it just ticks off to 80 here, bang, we take some off. I mean, it could go straight through to a buck. You don't know, but that's sort of the risk. But it also could stop here, come straight back down to 50 or 45, or even bad news comes out. You don't know what's going to happen. So, but either way, that chart, what we're saying there is that was, you had more than enough opportunity. Your first sort of heads up was that, I'll take another screen snapshot. Well, yeah, I'll take another screen snapshot. I think your first heads up was really that things are starting to heat up was around here. Well, probably earlier. I would say my heads up was, I'm looking at that sort of that candle there, probably looking that there. So for me, that was just an ideal. That would have been a good little entry. I mean, you would have to sit through it, but you know exactly where your risk was. Breaking up through, say, 32 and a half, 33, the entry, your risk is below here. You can even put your risk a bit lower towards around that 22.5 cent mark. Percentage-wise, fairly large risk. I mean, that's a tight risk. I'm always happy to have tighter risk sometimes. But you can see it never got it never got touched anyway. Never headed back below 30, much well about 31. So it turned out really well. Ideal setup, and then you're just looking for the market to start edging higher. And of course, now you'd be sitting on what 100%. That would have been a cracker. From here, um, yeah, it's not slowing down at the moment. So that's the tough call. Toughest call now. I mean, it's hard sometimes getting in, but it's also just as hard getting out. You got to remember, and it's just the reverse psychology. Um, when you can't really, if you flip that chart over, I mean, I couldn't do it, but that's heading down to lows. You'd be looking, you potentially, you'd know that most people would be looking at it going, oh, look, that's overextended to the downside. It's falling like a stone. It's got to be coming, fair value right now. It's got to be coming to a price that, if this is inverted, meaning this is the high and this is the low, it's coming down instead of going up. If you just inverted that, you think of the psychology where you're looking at it there, you'd be potentially just looking like that. It's getting creamed. Okay, I'm looking for a buying opportunity because this is going to be well and truly undervalued. It's a good stock, whatever the reason. Um, and then and there will be people who will just nab it at whatever price down there, not really off a setup. So you got to look at that. It's exactly the flip side. There will be people looking to take profit. Doesn't matter what the chart's actually saying, whether it's saying that it's finding weakness with a lower high, like here. Ideally you'd be looking at something like this. It pops up, good pullback, heads up that there's weakness on that candle. Should go back up again if it was strong. Doesn't, builds a lower high, then just get out. So there will be people that are trading it purely technical like that and are willing to give up a bit. There's also people that just go, bugger it, we're up here, I'm out. I'm just going to take some off the table, and that's just a pure psychology, trade of it all. But if you're looking at it and you get in a habit of potentially, if you're taking the other side, if you were in it, what would you be thinking if it was dropping? Like if you inverted that and it was coming down, what would you be thinking? And just assuming that it's a good stock, not an absolute rubbish stock, garbage. If that was heading south that way, the way it is accelerating to the downside, there's going to be people who are going to look at that going, oh, it's value now. It's really good value. Just bargain hunters. All right, so that's it there. Yeah, the trend, yeah. So I mean, look at the trend. This is for me. This is your upwards trend. So when you're getting essentially 37 cents away from the average, um, and if you're looking at that going, well, if I want to buy into it, I want to buy at least closer to the average. Yeah, that's probably going to keep a lot of new traders on the sidelines. So you got to remember that too. If you're a new trader coming in here, there's a very small amount that would buy it right now. Bang. I mean, because where you're going to put your risk technically, you've got to put your risk even tight is going to be down at 47.5 now. 47.5, 77.5, what's that? Somewhere around 50%, 30, 40% stop. Now that's nuts. If you're actually going to run a stop, if you don't run a stop, it's nuts anyway. But if you do run a stop, um, why would you put your stop there? It's way too tight. Where would you put your stop? Would you put your stop here? I wouldn't put that. I wouldn't be happy there because it's just one below today's low. Would not touch it. So in essence, what I'm saying, there's a very few people that would probably want to buy it up here. It's only the FOMO traders, the fear of missing out traders, that are going to want to chase it because potentially they've missed it all the way up here, waiting for that big correction, and then you get these little minor corrections, and they just keep missing out. So they're the ones that buy it, bang, it might go up a bit more, and then you'd expect some profit taking to hit it. You can see the volume that's come in here. The volume's picked up all the way up, and it's starting to ease off a bit as we get a bit higher. So if it starts to ease off, you might just, that's the way I'd be assessing it anyway. I'd just be looking for a potential partial exit. But like I said, this is the time where it's a bit tougher than normal. I'd ideally, I mean, you could even do that. Just put your stop here as a partial exit and see where it goes. See if you can squeeze in the stop one just below the lows, potentially lower the day. Put a half exit here on stop, sell on stop for half, and then have your risk for the remaining down here somewhere or whatever. Or and if it closes up here today, then you might do the same thing. If it kicks off tomorrow, you might just move your stop up. Just really start to tighten in, because if it's a strong market and it is FOMO buying, that's going to open up here and keep going. So you're not really going to get stopped out. But if it does come in and stop you out, there's a good reason. There's probably just some profit taken in there. All right, guys, hope that makes sense on that one. That was got a bit sidetracked there. Um, the other one was, I think Paul was asking about CKF. CKF. Is that what I'm talking about? CKF. That's not. I can't spell CKF. That's the one. So Collins Food. We've had this on the radar for a while. I'll draw it up. On the daily, I wouldn't buy it. I want to state that straight off the bat. Even though it's kicked off here, I would have, even finding it harder to buy through, was it higher 57, 577, wouldn't have bought it there just because of the price section of late. It's a bit choppy. The price section I really do like is the weekly. And I think for me, the weekly is starting to build. Let's just draw that up. Here we go. We'll get there. So how's my husky voice going? I love it. Right, so this is sort of the trend that I'm looking for, the weekly trend. It gets a bit ahead of itself, then you have these corrections. And it's more back to the MAs, it pulls back, and then it starts to go again, gets ahead of itself, these sort of corrective action. And we're sort of in the midst of that now. I'm seeing this correction now, and this is what's kept me out. It's mainly the weekly. I haven't seen any decent setup on the daily. If I was going to buy it on the daily within this contractive price action, by contractive we mean you can see that buyers are pushing higher, building higher lows, but sellers are still holding lower highs. So it's coming to that point of agreement, and that's what I never like to buy it on a breakout. Buying it here, for instance, through that high on a bit of a breakout, and it's still within that contractive price action because it could easily pop up through the high, hit resistance, bang, straight back down again. So I'm always concerned that's going to happen. I'd rather see, like I said, if that's your contraction there, I'd rather see something come break out, pop up, so you know exactly which side of the market's going to start winning, who's going to win, buyers or sellers. With a pop out like that, you know the buyers are in control, and then you might find some sellers are starting to run for cover, and just look for your entry from there, your high or low. If it doesn't play out, I know that's the ultimate risk. You sit and watch something for so long, it takes off exactly like you thought, but you don't get your entry and you miss it. That's the nature of the beast. There could be a time when you get it here and it comes straight back down again. You don't know. So I always like to see that sort of pop up out of contraction. It's that point of agreement. It's broken. You know that the buyers are in control. I mean, if it pops out to the downside, sellers are in control, and then you have to sit and wait, or you take it off your watch list. But the fact that it pops up, you know that buyers are in control. Then look for your high low. Your high low is just confirmation that you're not the only one wanting to buy it into it. And you build your higher low, it starts to rise again. You're buying on the rise, and 9 times out of 10, they're going to accelerate after that as well. All right. I know, Paul. I'm not going to look at it, mate. Yeah, that's fine. I with my style of trading, I would just um, no, I would with my style of trading. Don't worry, me and Paul always going back banter. You wait until we get on the phone. Um, yeah, my style of trade. I'm always happy to give up things like that. It's because it's really just comes down to the energy you put into it, and that's trading. For me, and it's probably personally it's taken me for a while to get over. Um, when you put in all the effort, especially when you're new, you're learning, and you put in the effort, and if you've had a couple of losses, and then you see one that kicks off, but you don't get into it, that could just be a mental. Oh, how would I say nine? It just messes with your head mentally, and that's when you will get into the next one potentially off something that's not so strong, and then you could, I mean, you could make money on it, or you could turn around and get creamed on that one as well. So your stats have been 3 out of 3 losses, and the one you did pick that kicked on strong without you, it really messes with your head. But that's where it comes down to refining your entry and just remembering this is the reason why. I mean, I've just told you the reason why I like this. I got confirmation that buyers are winning out. You got the longer term trend. We've got contraction down, where selling's come into it. Buyers are starting to take hold again. Potentially, this is a new major leg up. So this is your weekly. That's your pullback, which is this contraction. That's your pullback, and you're looking for this next leg up. So that's what I'm looking to take advantage of. And when I'm getting entry here, it's nice and early, potentially somewhere around here on your weekly, um, for this leg up. So that's what ideally I'm looking for. Um, that's where I find my payouts have been quite good. Um, and I think my hit rate's probably around 60%, say. So 60% right, 40% wrong. Doesn't sound so great, but when you're getting 2, 3, 4 to 1, that's trading, and that's what you want to be able to do. If you can get up towards 80, that's awesome. But I know your strike rate won't be 2 to 1. It'll probably be more like 1.5 to 1, 1 to 1. Either way, you're probably making money anyway. So um, that's my style of trading. That's why I like it, and that's what works for me. But it is it's taken some time just to get over that mental hurdle of seeing something run and kicking yourself. Um, but I know that the next one, if I do the exact same thing, that's going to kick off. It could go really well. For example, look at this Molly. Where do we get into? I was sitting here waiting at 22.5 for a while. I mean, it's only 23.5, but percentage-wise, that's 6% today, isn't it? If I can count, I was about 5% today. So that's what I love to see, And this one could kick on. Look at the weekly chart on Molly. That same sort of thing. You've got this big press up, and I think we took advantage of it up here. We got in somewhere. We didn't get all of it. Funny story. We had someone last time we traded Molly, MOY. We got in, had a good little gainer, and then I was speaking to someone. They said, "Oh, that's a great column, Molly. It's going really well." And I go, "What do you mean going really well? We got out of that a while ago." We got out. We got stopped out in this little pullback. We put on about 40% gain, but they still had it from about, say it was at 25. They still had it at say 32 or 35. I said, "Oh, look, we're out of that. It's gone a bit hard. You're lucky enough that you didn't stop yourself out, and it's gone even further." But yeah, that was a cracker back then. That was a really good price action. Look how it went on. It went on really strong from there, but then it pulled back quite as hard, and we've been pretty much since mid 2016 in corrective mode. Higher low here. It's a weekly higher low. That's where your corrective action, but then you've got your major lower high here, and that's just cleaned out a lot of buyers. But you can see now that's your low way back in 2017. We pushed up, pull back. That's another major high low. So we're starting to hold some higher lows, and it was only this recent price action just pop up here. Okay, we got a little lower high here. Then we pull back just recently to put in another higher low around 18, I think it was, and we started to lift. So going to your daily, knowing that the weekly's starting to lift, I'm potentially just edging up to 26 at the moment. So this thing, if we can kick on the 26, yeah, great. We might take a partial there, and we could have a lot of room to move on the upside. I mean, if it takes out that high, was it 26? Then that could be just the start of a new major leg up, and we could be looking towards 40. So that's the one we're out there. So what do we got? We're back to CKF. Yeah, I still think this one. That's what I'm looking for there on CKF. If this kicks on and goes straight through that sort of $6 zone, then I'll be looking for this again. I want to see that pullback, especially from the weekly. Then it's going to take some time to play out. I know that, but with all this price action that's been building up and this major correction, it's essentially sideways. If you know what I mean, it's holding. This is sort of the low around 5. It tested it a few times, built your higher low in here, and we're starting to lift again. Hasn't broken out of the contraction. It could come straight back down to 550. And what we run the risk of, because it hasn't broken out of contraction, it could just go bang around there for a while, or we could hold the lower high and press out down to the lows. We don't know. No one's winning out just yet for me, at least on the weekly charts. On the daily is just pressing. It's just got through that 590 mark. So it'll be interesting to see if we can kick on towards that $6. If we can press up through $6, I think that's what you want to keep an eye on. And if you're a bull, we'll see how we go. Was it the last one I was going to go through? CKF, that was it, wasn't it? Now, put your shares in. So we've got Paul, Bank of Queensland. We'll have a look at that. Where'd you buy that at, Paul? 6th of July, 10.49. Yeah, that was a great entry there. For me, it was obviously against daily and weekly bias, but and this is the beauty. This is another, just to give Paul a bit of credit where credit's due. You can see that it's why I don't mind that entry at all. I mean, this is one where you sort of got to sit on there and hold it to see what happens. The fact that $10 level, if we go back and just look at the weekly charts, that $10 level, you can see that was quite a really strong support zone. So it's traded here. It tested through at this stage. What was that back in 2016? Finished above that $10 level. We've got all this price action straight back up, a major lower high here, pressed straight back down in 10. Again, it rejected that a couple of times, 1, 2. The second time again, it did close slightly below it, 980, 996 it closed, so 4 cents below 10. Then tried to hold it, And then on this candle here, it actually closed, tested pretty strong below that level, and then closed above. Actually, it was on the weekly charts, it was a positive close for the week. So what you've got there is that 1, 2, 3, 4 times it's tested through. So if you're flicking down to the daily, and look where we are, stochastics are way down in that oversold mark. We're at a key support zone, very key support zone. So that's a positive. Um, that's rejection off your weekly, and then we popped up. But with this little push up here, we've taken out these. What's the high there? 1050. Say we've taken out 1050. So 1050 is breaking. It's breaking the anchor. It's pushed up through the anchor of this downtrend. So that downtrend, essentially, for all intents and purposes, that's broken. It doesn't mean you're going up. It could mean you're going sideways. Does that make sense? As soon as that's broken, the next two things to look at, I say, okay, I can probably cross off the cards that it's going down because that downtrend is broken. We're either going to go in a macro correction, meaning we're going to grind higher, and then we're going to have a strong rollover and push lower again. But you can make money off a weekly macro correction. Don't forget, you can definitely make some money off. And that's the weekly charts, the ones we're looking at. Strong support at 10. The most recent leg down has just been broken with a pop up from the daily, and then you've got this pullback. The thing is, you've got this little pullback here, and it's a high low, and you've got, say, if you really, this is really going down into the analysis of the candles. You've got a red candle here after this pop up, green candle, sort of that indecisive candle, another red candle down. It's opened down and popped back up on the daily. That's a green candle. Then you've got a red candle, but it's a higher low on a daily basis than this green candle here. High low on the red, another green candle, another red candle, but it finishes. Sorry, it finishes down on its lows, and then it starts to pop up. So you've got this indecisive action, which is all goes. You add that all together, it's a nice little higher low, potential zone for a higher low. And as soon as it pops out on this candle, you could have bought it, which is essentially a 1049 high. So if you bought it through, look, I'll mark that up. It's a very small minor entry, but pulls the fence. It's a good little entry, and all you're looking for there is really you've got to be on the ball because you know that the weekly trend is still down. We're just going to have that 1, 2 legs up and then roll over and get crucified. So you're going to be really on the ball of what's happening there. But in essence, it just kept going high. And you've got these pullbacks, building higher lows, and it's still going down pretty nicely. So that's the reasoning why the entry is quite nice. Personally, just wasn't interested in banks at that stage. They're looking good though. And you go back to, let's look at CBA while we're at it. CBA, that 70 mark for me is quite very similar. Look how many times it's touched at 70, 70, 70, 70, 70, 70. Give or take around that zone. Big washout here. I know we actually closed below it a few times, but we bounced straight back. Look at this green candle, straight back up. So that's cleaned out. And the fact that it's oversold would never have gone short that from the weekly chart anyway, because you're in oversold territory. I'd rather short it off a lower high, like potentially up here, but I'm actually more bullish on this than anything else because of the number of times it's touched on that support. You add into the mix that we've washed it out here, popping up. So really, longer term, if I was going to be a longer term buyer on this, I'd need to see it pop up through 76, say, and then pull back to build your higher low. And then it's just a matter of following the same old rules, off a higher low, and then go for it. But I don't mind CBA. I think it was ANZ was good too. Just look at, I mean, ANZ will draw that up. The price action I actually did like off that. You just got to take note of the price action, the way it moves down. I mean, the way it moved down here was quite hard. You look at that, and if you have a Fibonacci tool, which I don't really use, that's only sort of probably 40% retracement before another leg down, another 40% or 30% retracement at that stage. So you can see the legs down were hard retracement. So that's just no buying strength at all. Another hard move down, no buying strength up until we started moving down here. Then we've got a decent correction. That's 60% retracement. So you've got to take note of that. How deep do they retrace? And same as when the market's rallying, how deep, if it's going to pull back, how deep does it pull back? Because that's a sign of strength or sign of weakness here. And then, of course, you've got this pop back, pull back, then it started holding higher lows here. And then, okay, you've got this sort of contraction, and then boom, out we go. Really didn't look back there. Then it's sort of the reverse. Good move up, not a fairly shallow, say 40 or 50%, 40% retracement here, probably about, give or take, about 40, 30 there. We didn't get through the highs that much there. This retracement, bang. it was more of a retracement. It was a complete 120% retracement. So that's where you go, okay, maybe strength's coming in, or weakness is coming in. But look at the moves here. That was okay, good move down. That was about a 50% retracement there, but it spent a lot of time doing it. You can see the way it's chopping around here. So that's not strength in selling there. And then this is all part of one move. We didn't get through the lows too far to get down to these lows at 26, off a fairly deep retracement of this leg down. So these are the legs we're sort of interested in. We'll change colors. That's not changing colors, is it? I missed it. So that's the leg down. That's your secondary, your next leg down. So that retracement there was over 50%, probably 60% of that move down. And then we didn't take out the lows very far. So this move down, really, although it's weak, it's showing a bit of sign of, buyers starting to support it. And the leg down, the sharpness of those moves down are quite severe. This was, but this is not. This move down is a lot less severe. And we couldn't take out that low. And in conjunction to the major low at around 2150, this could potentially be that weekly high low zone weekly, and then you can see the way it's popped up through that level. Again, we've broken the anchor of that level down. We popped up. So ideally, what I'd be looking for is to work off a high low here. Off your weekly chart. We're on a weekly chart. Look for a higher low, and then just really drilling down to your daily for again another higher low on your daily chart. Well, the daily doesn't look that strong here, but if we can get it popping up, pull back to build a higher low, it might be worth throwing some money at this because of the weekly charts. Does that make sense, guys? What I'm trying to sort of just breaking apart the charts, the price action, trying to analyze the weaknesses of a move down or the weakness of a move up, the strength or weakness of the strength of a move up or down as well. Just trying to analyze that and go, okay, hang on a second, this is actually not looking too bad. Maybe I should be, this could be a double bottom here just above 28, or a triple bottom, I guess you call it double bottom. But I would have to be confirming it off a higher low. I would not want to just buy that here because it can pop up. You go, yeah, I'm winning. Got to 28.75. Look, I'm up from 28.50. Then boom, straight back down. Yeah, it stopped out. Just because of the price action was not quite right. You still really just going to drill down to that entry, and it probably is exactly that kind of entry that Paul traded from BOQ. Excuse me. Hope that makes sense. Yep. All right. So, any questions on those guys? Now, there's a question from Wes. We'll get over to Wes. Yeah, Wes Farmers are showing weakness, but I'm in two minds whether this is going to roll over or this is just going to be contractive action. And you don't want to get caught up trying to short in when the market's really contracting because they sort of don't take out the lows very much and they bang straight back up again. And you could be sitting, you don't get stopped out as such. Like we're short this one. And the reason we were short this one is that one, it's worth having a short on just as a bit of a hedge to if this market, the overall market rolls over. If we have China, US come out and start banging on about stuff again, they don't come to some sort of deal, this market's going to roll over. And it's not a bad idea to have some shorts. Well, one short on. We got two at the moment, I think. You can see that price action. It's holding lower highs. Whether or not this is contractive price action, which sort of ding, 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 like that, contracts lower, or maybe a bit better than that, a bit cleaner than that. This is what I mean. Whether we're just going to do this and then maybe it does that, I don't know. But at the moment, I'd rather see, like anyone, I'd rather see something just boom straight down like that. So you get in and you're in front straight off the bat. But that's the sort of leg up. I think this leg up's definitely broken. It's just, are we going to get something out of this? Is it going to be worthwhile? Is it going to pay out? Or are we just going to sit and take a small loss? But to be proven wrong, I want to see it break up and out of this contraction. I don't think the contraction is far from finished yet. So we'll see how that one goes. All right, so that's just got over that. Now, what I wanted to go over, yep, I'll go over it, is I think Laurent was just asking on our forum about, what's it called, VWAP. I don't know if anyone's heard of VWAP or anyone uses VWAP. Volume weighted average price. It's mainly intraday because I've been doing a bit of work on intraday stuff, throwing up a few trades there, seeing it off some charts. So if you're interested in just seeing the charts, you can more than happy to email them off. Just send an email through to support@tradesetup.com.au of just stuff that I've been following and trades that I haven't taken them because it's more of just the paper trading while I get myself together at the moment and just seeing how it goes, testing the strategy, what I'm looking for. You just got to go through the motions of, well, with intraday anyway, is making sure you're picking a whole lot of stocks that are going to give you something to trade, and two, whether it's worthwhile. Um, so it's really just going through and then, okay, making my list in the morning or in the evening, in the afternoon, go through, get my filters, go on, spits up a whole lot that are moving, then just drill down the charts. Okay, would I take this and why? And then just writing some notes, put them on a watch list for the next day, and then just watching to see if they actually give you an entry. So that's what I'm going through at the moment. And today, I don't think anything's really happened, to be honest. Let's just see. I'll get this across. So this is a spark. Just the way I've these are 5 minute charts, 5 minute charts. So this is just a way with a bit of depth here. It's probably harder to see because it's going to be small on your screen, but a lot of them that I've been looking at, I didn't really set up for this morning, to be honest. The only one that I could really see was probably Sims Metal. That may have given a good little entry, and that's probably based around VWAP. You can see VWAP playing an interest here. So VWAP's mainly, although I don't use it a hell of a lot, I do take notice of it, and I do have it on my charts for intraday. Um, let's just go back. I'll get that out of the way. So it's SGM. So that's SGM. It's been choppy around here, but the thing is, it's actually moving. The good thing is with SGM, the reason why I've been watching it intraday is because you're getting movement. You're getting some good movement. Oh, look, in that kind of when it bounced a bit here, you got these big sell-offs, a good hard bounce. So when you get a major sell-off like that, you're probably going to get a hard bounce too. So you could be looking on the long side, even though the market's negative on a daily basis. Intraday, you could actually be looking for a long. Then you got another good sell-off, and it's starting to get a bit. Probably the volatility is coming down a bit here, but there's still some good movements. Um, yeah, so intraday here. If I just take a step back, oh, I haven't got VWAP on here. Let me just change charts. Here we go. So you can see this line here is the VWAP. This is the blue one here, and it's just from open. So the market's open. That's your VWAP. You can see sellers well below VWAP there. The market's just pulled back. So that probably makes sense when you've got such a big gap up. You know, from the previous day's close. Sorry, that was Thursday last week. Gaps up, has a pullback, and then what you're looking for is that if not that I use it a hell of a lot, like I said, but what you'd be looking for is at the touch VWAP. But some people trade the same sort of thing on stochastics, sorry, and on moving averages. Now, this is just a simple moving average. I think it's a 20 and 100, if I'm right. Where am I? 20 and 200. So that's my 200, sorry, moving average, yes, simple moving average, SMA, and a 20 simple moving average. So you can use those similar. It's sort of you're looking for that. This one's a bit messy, but you could be looking for a pullback to the 200 or a pullback. If it's a strong market and it's starting to show it's rallying a bit, you can have a pullback to the 20. But you can use the VWAP similar, although, like I said, I don't use it too much. But you're really just looking for. You could view it a different way also with VWAP. So that's the volume, the average volume price or weighted price for the day, for the intraday. So if you start to get down here, you're going to be looking at that going, look, the fair value or the average seller is, with an entry up here. The same with the average buyer. So it's going to get a bit overcooked here. It might revert back to the mean. So when you get too far away from the VWAP, you're potentially looking for that reversion to the mean. Not always. Like I said, it could just pull back. But if it's more the VWAP sort of evening out, and you could look at it with your stochastic, your moving averages as well. They're fairly flat. You wouldn't expect this to just continue its way down because that means everything, what you're seeing from VWAP, what you're seeing from your moving averages also as a market that's sort of evenly balanced between buyers and sellers. So when it gets too far away from VWAP, you're probably looking for a bit of a reversion, so a bounce back, which it did, pull back, it touched back to move. So you get people who actually may sell it here, or you wouldn't really buy it. What you'd be looking for to use VWAP, ideally, if it pops back up through VWAP, so the average trader for the day or the average buyer is sitting in profit. And then if you see it pull back to the VWAP and starts to lift, you could potentially buy it because you don't know what's going to happen. It's going to lift. It could lift all the way and get to extremes. And then intraday, if you're intraday trading it, you'd probably be looking for, when it gets to the extremes away from VWAP, potentially just taking a bit of a profit because you know that's like like an elastic band because that average price for the day, that volume weighted average price, it can't get too far. I sort of view it like an elastic band. If you stretch it too far, it's got to come back as long as you don't break it. But you know what I mean? If it gets too far either way, you're sort of looking at a high probability it's going to move back to VWAP. Even if VWAP's on the rise, I'm trying to find one. I'll see if I can find one that's actually trending. Um, you'll say here, this is a 30-minute chart. It gets away, not so much from VWAP, comes and tests VWAP around here and then starts to fall again. Then you get sort of testing VWAP, and it starts to fall, but then it builds a higher low, so you got to take notice there. Pops back above VWAP, but it was really flat and comes back down. It's more this when it's trending like this. This is a 30-minute chart. I'm looking more at that the moving averages than anything else. But you can see what I mean. It's sort of coming back to VWAP, coming back to the average and accelerating down again, coming back, accelerating down. This is more of a corrective action. But then you see this trending high. It was sort of, you probably see it better on a 5-minute if I can get that. That's going to be a tough one actually. Here we go. This is a good example. You can see it's open. It's pressed down quite hard. Pull back to the VWAP there, and that's where you could be looking to short because you know that the 30 minutes are trending down. Stochastics are down. Everything's in your favor. You've sort of got that reversion to the mean type of style, and then you're looking for an entry, a selling entry there. And then in this session, that was a cracker there when it actually fell over. So I was looking to short it then, and it just where your risk is going to be. It's quite small risk, and that acceleration that was all done by about midday, and that played out quite nicely. So that's the style of trading I like. That sort of reversion to the VWAP, so that you know that anyone that's bought it around VWAP is going to be down for the day. So sooner or later, if it starts pressing lower again after it's touched it a couple of times, you got to remember that the people who have bought it, well, above VWAP, or say bought it on the open there, or every time it comes back, they're buying it. So the average buyer is going to be down, if that's making sense to you. So the average buyer is down. Sooner or later, they're going to get squeezed out of the market, and that's where you get that acceleration down. So you can look for a short there, and the reverse on the upside. But when you got not so much on the upside, when you've got your stochastic, your moving averages, I'm getting it wrong. Your moving averages longer term is down, your 200 is down, your 20 sort of just reversion to the mean at this stage, but at that stage it's going down. You've just That's where you'd be looking for a sell now. If you flip that chart over, invert it, you'd be looking for a buy. A pullback to the VWAP or even just your moving average, and then look for a long. So does that make sense to you guys? I probably got a bit sidetracked there, but like I said, VWAP's just a good indicator. It's you just have the theory that anyone that's bought it, the average buyer is going to be down if it's below VWAP. The average buyer is winning above VWAP, if you think of it that way. So if the average buyer is winning, you're looking potentially for a setup on the long side where the shorts could get squeezed out, and reverse. Like in this case, the average buyer is down. They're down on the day. So if you're an intraday trader and you're down and you bought it, you keep trying to edge into a position that keeps going against you and you're losing, sooner or later you're going to get squeezed out. You think you would get squeezed out anyway because you don't know at this stage. Just go back, just drill that. You don't know at this stage, if you can see that, yep, whether that market's just going to keep heading south, go down through 13, pull back to the VWAP and keep going down and just finish on the lows for the day. The next day can open up, same thing again. You don't know. So that's where you'd be using it, especially intraday, because people intraday traders or they don't want to hold it overnight. You don't really swing it. You only swing it if you probably get yourself in trouble. By swinging it, I mean hold it overnight and hopefully it opens up with some strength and you can get out at break even or at a small win. But generally, intraday traders, you're not going to do that. You're just going to take your loss, lick your wounds, and start again the next day. Uh, yeah. So what Helen was saying, VWAP she finds very useful at highs and lows, sort of extremes. I'm guessing. All right, but that's like I said, I don't use it a hell of a lot at the moment, but I do take notice of it. So There's no real example here. This is probably this example. This is a good one. This is really the only one that I was keeping an eye on today. To step through this, you've got pretty much buyers and sellers. You had a lot of chance if you're a buyer above VWAP or pull back to VWAP and you bought it, and then it kept going below. You kept going into loss. You had more than enough opportunity to get out there. And the same on the sell side. You probably had a bit of opportunity if you shorted the market and it popped up against you and it come back down. Just thinking that your average is going to be the blue line. You got a few chances to get out at break even or up slightly. But either way, when it sort of goes above and below VWAP during that session, there's indecisiveness in the market. It's not too strong, although it did finish. It finished on quite strong. That could just be this push up into the close is because you got all these shorts was building up and just gave up the ghost after that. It held VWAP here at this stage, held here. So if you were looking at it and it started popping up, pull back, didn't quite get the VWAP, you're probably just bailing. It's getting late in the day. You don't want to hold it overnight. So if you're short, you got it wrong, get out. And that's probably why you've got this little pop up into the close. But what we've seen today is the markets open. What do we open? It's 1293, which is below where it closed on Friday. And the first few candles were quite weak. So that's a bit of a heads up like, oh, hang on a sec, I thought this was going to be strong. So if you're looking to buy it, you probably have to be thinking twice. Well, I would have been thinking twice about that. And you can see it sort of pushes back down below VWAP. And the first few, it's a bit harder with using VWAP on the open because you're still going to get enough information just to see what's going on or what's happening. And at this case, you probably, if you're waiting for a while, you would have seen these first few candles, weakness on this first 5-minute candle, and then a bit of indecision as it gets a bit lower, back down to that same sort of indecisive level around 1284, 85, touch down there, pressed up, you go, okay, I'm looking good. Good green candle, but then it just touches up to that high at 1293, touches again there, and then fails the next few minutes. Next 5-minute candle fails there, it comes straight back down again. So if you're looking to buy, you think, oh, if this is a strong market, it really should have gone through 1293, taken out those highs and gone on with it. And you could have got your 5 to 10 cents out there if you're a intraday scalper. Instead, it sort of grinded its way back up there to 1293, washed it out, and then started to fail. So I'd be looking, and that was holding around, not really holding, but just holding just above VWAP there. So what it's really doing is probably just collecting a few buys. The average buyer is thinking they're quite good up there, and this is the squeeze when it turned around and squeezed them back out again. So what I'm looking at there, so intraday, I'm looking more for a squeeze. I'm looking more for, when people are getting it wrong, and I can take an opportunity to get in, and that's your highs that if it's a strong market, you should have got through there. This is the level that you probably got to keep an eye on where it's just not getting through there. You did wash it out, but then it's finished below or finished right at 1293. Then you got a red candle. Then this green candle should have kicked on. You should have seen it go up from here, but instead it didn't go anywhere. And then you got a couple of red candles, and you could have just really entered it through. What's that? About 1289, 1288, say, and you've got a trade on your hands, and then you're really looking towards that lows. Okay, straight through there, and then you've got all these people here. The buyers thought they got it right into the close here are potentially getting squeezed out. So you've got buyers that are built here, buyers that are built through here. It's turn around and it's squeezing them back out. So the first port of call, if you were buying it here, you might be thinking, okay, bit of weakness on the open here. We're not looking so great. I might hold it and I'll put my stop below this zone, below the potentially the low of those days or these high lows. And the market's probably, if it's going to get ahead of steam, which it did on these couple of red candles, it's gone straight through that zone. You go, okay, the next port of call is going to be stopping these people out and squeezing them out, which it did. Squeeze them out, only got down to those 1276, and then you find that I tend to look at my stochastics a bit. We're in that oversold mark. And then just looking at it and just looking at each candle, you got a couple of green candles here. That's your first sign that potentially some buyers coming back, and you can just close it out there. In essence, you've probably got about, closer to 10, 8 cents there, depending on your volume. So that's a handy little win intraday anyway if you're scalping. So yeah, that's my little story on VWAP. So I hope that made sense, guys. I hope that was interesting. It's harder to find some. So like I said today, there's not too many entries. I'll just get up. Not too many entries that I saw today, and that was the only real one I've taken notice. I haven't really been taking notice today, to be honest. If we can get these up, these are the ones that marked up from Friday. This is a minute chart. Excuse me. Um, so that's the Friday price action. You got the open here. You know, pushes below VWAP. Just thinking that below VWAP, sellers are in control, or not sellers are in control, but sellers are winning below the average sellers winning below VWAP. And if it holds there and can't go on with it, there's a potential that they're going to get squeezed out if they're sharp, fast, they're moving faster. The market's popped up, it's gone sideways. So it doesn't mean that just because you're above VWAP that it's going to turn around and head below VWAP. But you've got to remember it's based on the overall the daily charts. There's a whole lot of other reasons why you potentially be biased long. Um, so I'll put down here biased up coming into the session from daily and 30-minute charts. So I'm looking at the daily, the 30-minute charts. I'm biased up, and I'm looking basically for an entry on the long side, and that's the way it played out here. Bit Probably a bit aggressive, but you can see the way it's opened up here, pressed down. It's pulled in some of these. It's just tested these latest buys, probably squeezed them back out, but then it's held quite nicely. So if you're looking at the depth, you might find that buyers are hitting the offer. Buyers are hitting the offer, or there's some big buyers stacking up there on the bid, on the buy zone, or the bid, if you know what I'm talking about, the bid. Just stacking up there, and it's just showing a bit of strength. And then you get this pop up, it goes sideways, and it's just ever so slowly on the minute chart, I know, but it's holding a higher level and it's just holding that stochastic. So that's your continuation pattern you're looking for, and just buy it with a pop up and then see how long you can hold it. Potentially popped out here, but that is a half tick. So you can't really trade half ticks unless you can trade midpoint, which I can't anyway. So I wouldn't have really got squeezed out there. So it's done all right. It's kicked on to about 187 before potentially showing some weakness through here, and then you're getting stopped out here. I don't even know what that gain is. It's somewhere around. Look, it's only 2 cents gain, but that's 4 ticks on a dollar something stock. If you're doing $10,000 or $20,000 worth, that's quite a handy little gain for about an hour's work. So that's one. You can see some more action here. I didn't look at this one. I wasn't really thinking this was a buy or sell, but you can just see the price action. I'm just marking up price action for interest. Keeps popping back to VWAP here, selling off, back to VWAP, selling off. So that's just continuation until it comes off it retests that loan and retests VWAP. You're probably going to start to think here's a bit of weakness. Still holds VWAP all the way through. It held VWAP, pretty much held it all day, didn't it? So that there, anytime you're looking to buy it and you come back to VWAP, if you're up slightly or you break even, you're probably going to think twice about that. So it's just continually squeezing out those buys that build up. And here's the other one. This is ORE. This is a very aggressive entry. I was looking at that 380 level. If it gets up through there, if it gets up towards there, I'd expect that to squeeze out 380. And that was a daily level and probably a 30-minute level as well, or the previous day's highs. So you know that from the previous day highs, there's probably going to be some buyers up there. So yeah, I'd be happy to take a bit of a punt there. You know where your risk is, which is only a couple of cents lower. That it can kick on and kick on. And I think there was a gap fill up to around that $4 mark that I was looking at. And that's coming from the daily as well. And you're pretty much pressed up there from 380 to, was it 390 it got to? So that before you found some weakness, but either way, you managed to book something there before it pretty much just failed for the rest of the day. All right, so that's it, guys. But all that theory, it's probably, if you want those charts, just let me know. Email me and I'll send them off to you. But the idea is it's a similar type of, you're just trying to read the difference between buying strength and selling strength and how they're interacting, the buyers and sellers are interacting with each other. And a similar type of, you're taking a similar approach to daily charts as well. When you're looking at to refine your technical analysis. Anyway, that's probably about it for me today, guys. Any more questions? You're going to have to save it till Thursday. But yeah, if you've got any questions that you want answered, just send me an email. I'm more than happy to get back to you. All right, guys, we'll probably call it a day there. Thank you very much for joining me. And like I said, if you want those charts, just give me an email, support@tradesetup.com.au. Any questions, send it to the same email address and we'll get back to you. All right, guys, have a great rest of the day and we'll speak to you on Thursday. Cheers, bye.